American businesses are hereby ordered to go where the money is, and that's China. I'm Scott Ott, and this is Bill Whittle now. And Bill, there's a story at Forbes.com about recent surveys of American businesses in China who say that even though most of them are pretty sure that the Chinese government is favoring their Chinese competitors, either with direct subsidies or favorable regulatory treatment or other ways which they can tilt the table. They're not absolutely sure, but they're fairly sure that's happening. Almost all of them say we're not going anywhere. We have no plans to leave China. The tariffs haven't hurt us that much. In fact, not only have they not caused a drop in profits, but we're actually more profitable going forward than we have been in the last couple of years. Bill, it seems to me that President Trump's whole tariff strategy is predicated on the idea that this is going to hurt China economically, but U.S.-based businesses operating in China are saying, you know what? It's like telling people don't go to the gold rush.
Well, there's a lot to say here. First of all, Donald Trump's entire theory may be wrong. In fact, that the tariffs are not only not hurting but helping, and that's certainly one way you could read this headline and this information, and you have to acknowledge that that's a possibility. I don't think it's what's actually happening for a number of reasons. First of all, the tariffs are not designed so much to punish American companies, although certainly they're designed to punish the overall economic rules that China plays by. The sanctions are aimed more at the Chinese government, and so I'd be curious to know what the situation is among Chinese companies. I don't know that they're any different than American companies. I suspect they might be in some areas, but I think the main point here is simply this. I think that there are some things in the world that are fairly obvious, and one of them is that we are in the post-peak Facebook era, and I think we are in post-peak China. China's astonishing growth during the last 20 years has been largely a result of the fact that they started from a baseline of the Stone Age. Seriously. I did a documentary on, I did two elements of a multi-piece documentary on China, and one of them I was doing on the Moon Festival. We had footage from 1995 and footage from 2001. You couldn't cut the two together because in 1995 there are people wearing Mao jackets, riding bicycles into stone buildings with dirt floors. And then along comes capitalism and this tremendous increase in Chinese wealth. And there's no question that Chinese is a manufacturing juggernaut. However, with all of that said, China is not the magical giant that we thought it was even 3 or 4 years ago. I mean, China was able to achieve an enormous amount of growth, an enormous amount of prosperity because their workforce was so inexpensive relative to American workers and those in the rest of the West. But Chinese workers are no longer the cheapest workforce in the world. And in fact, not only are they not the cheapest, but China is certainly not the easiest place to do business in the world. So I don't think that what I think is happening, if you look at the big picture, is that at first the overflow of work from China, I'm not saying China ever ran out of the ability to make things, but basically they were so flooded during this, I'm talking about a 20-year period now, that people started looking at manufacturing in places like Malaysia and Vietnam and all the rest of them. I think people are finding that those places are more attractive than China, and that as China continues down its path, Chinese products are going to be made in China products are going to become more expensive because the population is going to want more stuff of their own. They're not working out of Stone Age factories anymore. And I think that as these other markets where the labor force is even cheaper than in China, that's going to be a big impact. But most importantly, in terms of the overall picture regarding China and American companies' willingness to stay there or not, far more important than any of this stuff, has been the revolution, I mean the revolution, in American energy production. Because when we talk about moving to China because we can make more of a profit because the Chinese labor costs are so low, that's true. But if it turns out that American energy costs make up for slightly higher American labor prices, then there's no reason to go. So I don't blame people who are, look, all I'm saying is this, Scotty. I'm saying that people who are already in China saying we're not moving out of China, I don't think that was the expected result that Donald Trump had in mind. It's certainly not what I expected to see. However, As China grows less attractive, and if they decide to move on Hong Kong, the moral repugnance of the world will be reflected in people's attitudes towards Chinese products. I don't think China's future is nearly as bright as their past was, and I don't think it's nearly as bright as their past was by an order or two of magnitude.
No, Bill, it's not just the manufacturing anymore, and certainly you're correct in that China is no longer the lowest cost producer in the world. In fact, you see companies like Apple producing very high-tech devices that are not just, you're not dragging farmers out of rice paddies and turning them loose in mindless factories. They've got to have some brains to do these things. China is cranking out significant numbers of people who have the kind of education required to work in the high technology business, and many of those tech businesses are based in China. They're not U.S. companies. No, what these manufacturers, U.S. manufacturers are saying is China's requirement, if you want to access their market, is that you do some manufacturing in country. So they don't want you manufacturing stuff in the U.S. or elsewhere and then pumping it into China. They're saying, look, you want access to our market, you'll build stuff here. And that's the magic here, not just cheap labor, but a marketplace of increasingly middle class consumers who can buy American stuff, no matter where it's manufactured.
What if the United States were to adopt exactly the same policy that China has right now? What if the United States were to say, if you're going to sell products, Chinese-made products in America, you have to manufacture some or all of them in America? What would happen then? They'd be out of business, right?
I don't know. I'm not enough of an economist to speculate on the outcome of that, but that's not something that President Trump seems inclined to do in any case.
Well, what I'm saying is the fact that China gets away with having the ability to swing that kind of a sledgehammer, saying if you want to sell to the Chinese people, you have to manufacture some or all of this product in China. I mean, just think about that. I mean, just think about what that actually says. That's like us saying if we wanted to sell an American product, if we wanted to sell a Kenmore toaster or something, which is probably made in China for all I know, but nevertheless, if we wanted to sell something in Australia and our rules of selling, Corvettes to Australia or Australians was that they would have to manufacture some or all of the Corvette there, I mean, that's just plain intimidation, bullying, and it's the kind of strong-arm tactics that produce tremendous results in the short run, but which in the long run seem to me to be signs of tremendous weakness.
Sounds like you're describing protectionist tariffs, Bill.
I'm talking about tariffs that are not protectionist tariffs, Scotty. I'm not in favor of protectionist tariffs, but I am strongly in favor of tariffs as a form of economic punishment to stop or slow down a trade partner who is not only not playing by the rules, but violating every single rule there is as openly and brazenly as possible, while we continue to just simply kiss their butts for it and ask if we can have some more. This isn't a tariff to protect an industry, because if it was, these tariffs would apply on specific items across the spectrum, no matter where they came from. But this is not the case. The case is that these are targeted at China because China does things like product dumping. China does things like absolute disregard for copyright law, active espionage of simple manufacturing secrets, espionage. When China makes a copy of Spider-Man and puts it for sale in a Chinese market, that's stealing. And that's what their economy is based largely on. And I am certainly of enormous respect, if not admiration, for what China has achieved. But this can't go on forever, and it's not going on forever, and we're seeing that it's not going on forever.
Now, the opinion of U.S.-based manufacturers who are operating in China now may change as the new wave of tariffs hit in December from the Trump administration. It's not clear whether that'll have an effect or not, but the sense I got from reading this Forbes story is there's plenty of cushion, and there are plenty of ways that American businesses continue to operate in China because of the marketplace that they can access there, and it's going to be pretty hard to chase them away. But as you're pointing out, that's not the point of the Trump administration's actions. Something is going to have to change in the Chinese government's perspective on this, and so far it doesn't seem to have really hurt the Chinese government either.
Well, let's back up a little bit and ask a different question. If I understand you correctly, China is saying that for Americans to sell American products in China, for an American company to sell its products in China, that they have to manufacture some or all of those products in China. Is that correct?
I don't know if that's their rule across the board. I happen to know the CEO of an American manufacturing firm who said that the reason why they were operating in China was not so that they could make things cheaply there and export them to the United States, but so that they could sell stuff in China.
Precisely correct. That's exactly what I suspected. So let's say that I've got an American product and I want to sell in China, and I'm facing this arbitrary rule imposed by the communist Chinese government that says that if you want access to our number 2 market in the world, you have to continue to supply our industrial base by hiring our workers. That tells me that if I'm an American company, it may be more cost effective for me to basically build the entire product in America and then have the label manufactured in China. We put the label on the thing, and then we get access to the Chinese markets and we get to sell it. Now, that may sound cynical or simplistic to you, but it's not, because we're talking about long-term trends here, and we're talking about foundational economic principles that determine whether a company lives in China, America, or whatever. If it turns out that the main reason that so many companies are staying in China is not because it is no longer economically smart for them to do on the production side, but it has to be done in order for them to make a profit on the sales side, then China is essentially basically propping itself up against its inevitable collapse, which is just a matter of time. That's just as simple as it is. There is nothing. The market works, the free market works, free trade works, all of this stuff works. Tariffs are used to get people to conform to actual genuine free trade. If a company says that in order to sell your products in our country, you have to manufacture all or part of that product in our country, that's not free trade. By any means, that's not free trade. And I maintain that any company that's not actively trading in a free trade manner is a company that is weak, a country rather, that is weak and trying to protect itself and knows that it's in trouble. So I'm not concerned about this in the bigger picture. I'm not concerned about China in the bigger picture at all, to be perfectly honest with you. My concerns about China have eroded pretty steadily over the last several years, and I think that this fossilized government that they have, and this fossilized and frankly unfair trade structure and trade rules that they have given them a large temporary advantage, but are not going to help them in the long run. I really don't see this model surviving, especially if the Chinese leadership is inclined to do politically what they are inclined to do politically, which is basically launch some kind of crackdown on Hong Kong, which is not only going to hurt them enormously in terms of the world's image, and that will affect sales of products from China, but also it will to sever the tie with Hong Kong, to strangle the tie with Hong Kong is to enormously affect the Chinese economy. And this doesn't look like something that's going to be up to the Chinese oligarchs. This looks like it's going to be up to the individual Chinese citizens of Hong Kong. And this kind of dissent and this kind of discontent is not going to decrease, it's going to increase. And the beautiful thing about this, in the long term, it's tragic in the short term, but the beautiful thing about this is the more China decides to exert political pressure and getting people to conform to their bizarre communist capitalist system, the more it's going to get out of control for them. I don't believe the Chinese leadership is psychologically capable of allowing China to do business the way that free countries do business, and therefore they're doomed in the long run. I absolutely believe it.
Well, it would seem that is the only reasonable outcome given the direction of this negotiation that President Trump is conducting with them. I believe it was Sun Tzu in The Art of War that said something along the order of build your enemy a golden bridge over which he may retreat. And it seems to me that for the Chinese to get out of this debacle right now, they would have to admit some things that they've been loath to admit. Number one, that they've been stealing proprietary content, that they've been violating copyrights and patents and other things like that. And number two, that they have been subsidizing these businesses, which they deny that they've been subsidizing. And in fact, in this survey that I read in Forbes.com, most of the American manufacturers said that they could not have confidence to know that the Chinese government was tilting the table in favor of their Chinese competitors, but that they thought that they were. So how do you see this playing out as the final question here? At what point does President Trump say, Okay, now I believe that China's not stealing our intellectual property and that China is not tilting the table in favor of Chinese-based firms.
Well, I think he stops when they stop doing it. But the bigger question is,
how do you document that?
Well, I think any kind of one way you can document it is when China stops enforcing a law that says that if you want to sell products to our people, you have to have our people manufacture the products. I think that'd be a real good indication that they're being serious if they decided to drop that particular clause. But look, this is the entire thing. You've talked about the Chinese leadership and their weaknesses, and they're using these kind of bullying tactics in order to maintain this kind of manufacturing hegemony. But that's a paper tiger, or a paper dragon, I suppose I should say, because it doesn't last. Look, Scott, here's the thing. I think what's going to happen is Donald Trump is going to continue to put tariffs on Chinese products as long as the Chinese continue to cheat. When they stop cheating, he'll take them off. When they stop cheating, they lose. It's pretty simple, really. Does anybody ever think about the fact that when we talk about stealing of intellectual material or copyright violations, is anybody ever really stepping far back enough to realize that this is like the Berlin Wall? No one's getting shot going over the Berlin Wall to get into East Germany. There are no American cases of stealing Chinese copyrights in order to sell to the American people. The demand is in one direction and one direction only. And this is an indication of the temporary nature of the Chinese economy. Because the fact of the matter is that all of the ideas that are being stolen in order to produce goods that people want to buy are being stolen from the United States by China. When China starts creating the kind of market where they're producing the kinds of goods and services and entertainment and all the rest of this stuff that makes American companies want to steal Chinese secrets and Chinese copyrights, then I'll start worrying about China. But until that happens, they're simply a manufacturing outlet. Now, the other part of this is more important than the tariffs because it has more effect on the bottom line. American companies have moved to China in large numbers, manufacturing companies and service companies to some degree. They moved to China because the Chinese labor was cheaper than the American labor. Therefore, they can make a less expensive profit and sell it at a lower price point and make more money. That's what companies are designed to do, is make money. Great. I understand how that works. But if China continues to make these kind of rules where the American competitors suspect that the Chinese government is favoring their Chinese competitor, but here's the critical point. If American ingenuity in energy resources continues to produce the kind of low-cost energy prices that we have now in America and that we're going to see more of unless we elect a Californian or something, then not only is there no incentive to go to China because, yes, you save on your labor costs, but you pay higher energy prices, might as well stay here. Then there will come a point when American companies will move back to the United States, not as a result of the tariffs, but as a result of the fact that it becomes the least expensive place to manufacture your products. And I think what that would entail would be continuing drops in American energy costs and to some degree, a realization on the part of American labor forces that the days of making, $85 an hour on a car production line are just gone. And this was the whole theme of that movie we spoke about in Right Angle, this Obama film called The Factory, about American how these people used to make all this money when it was a car plant. Now the Chinese are here and they're working for half of that price. They're going to have to get used to working for half of that price. But they're not going to have to work for the wages that the Chinese worker works for. And as they continue to get richer and as the Chinese people continue to get more middle class in terms of their consuming habits, all of this is running against China. I think peak China happened 5 years ago. Certainly peak China ended on the first week of November in 2016. Of that, I have no doubt whatsoever.
Well, peak BillWhittle.com has not happened yet. We continue to grow month by month thanks to the members at BillWhittle.com. Our audience at YouTube has been growing as well as the membership here at BillWhittle.com. We're grateful to the members who make this programming possible. Frankly, the content has grown over the last year as well, substantially. All of this is possible because of the generosity of our members. If you'd like to become one of them, go to BillWhittle.com and click that Become a Member link. For Bill Whittle, I'm Scott Ott. Thanks for watching.